Bank Negara says Malaysia's economic growth is likely to be in the lower range of its 6 to 7.5% forecast for 2021 if downside risks materialise. The risks in question are COVID-19 linked uncertainties as well as sudden commodity shocks. However, potential upsides to growth include the success of the vaccine rollout, which would positively impact sentiment and spending. On the upside, Governor Datuk Noor Shamsia Mohamad Yunos says the economy is expected to rebound from second quarter onwards and return to pre-pandemic levels by mid-2021. She says a rebound in global growth in 2021 will drive a strong recovery in exports. In its Economic and Monetary Review 2020 report, BNM says that Malaysia's monetary policy in 2021 will remain accommodative as it aims to focus on supporting a sustainable economic recovery. However, Shamsia notes that comprehensive labour market policies are needed to support recovery from the pandemic crisis and prepare the workforce for the future of work. She says improvements to the investment ecosystem is necessary to attract and facilitate investments that can create high-skilled jobs. Malaysia's external debt increased to 958.5 billion as at end 2020, or 67.7% of GDP. In 2019, it had been 62.6% of GDP. Malaysia's household debt to GDP ratio had risen to a new peak of 93.3% as at December 2020 from the previous high of 87.5% in June 2020 as GDP remained below pre-COVID-19 crisis levels. This as growth in the nation's household debt normalized to pre-pandemic levels in the second half of 2020 as the country emerged from MCO. Sunway saw its net profit for the fourth quarter of FY20 improve by 5.2% to 193.1 million, despite revenue for the quarter dropping to 1.28 billion from 1.35 billion reported the year before. According to its accompanying notes, the top-line drop was due to lower contributions from its property and quarry business. However, due to the adoption of MFRS 15, the balance of development profits on one of the group's Singapore and China property developments were recognised during the quarter. For FY20, net profit halved to 359.6 million as revenue declined by 20% to 3.83 billion as COVID-19 and its containment measures took a toll on all its businesses, in particular hospitality and leisure. Sunway notes that although some of its segments are in recovery, it has been uneven. Going forward, while Sunway admits that it will continue to feel the impact from the pandemic in the first half, the group is cautiously optimistic that it will improve in the second half due to the vaccine rollout. LBS Bina Group says it has inked a JV agreement with Cameron Highland District Council for a mixed development project with a GDV of 1.5 billion ringgit. The project spans 51.32 acres, stretching from the Kia Farm to the Time Tunnel Museum in Brinchang, Cameron Highlands. According to LBS Bina, the development land was made available to the group via a tender exercise by the Cameron Highlands Council. The project will span 10 to 15 years and will commence within 1 year of the signing date. As part of the deal, the District Council will receive a sum of 120 million for the land, comprising 11 million ringgit cash and 109 million to be settled in the form of development costs. The MACC today detained 4 people, including a former bank president cum MD with the honorific Datuk, over suspected graft in approving a 400 million ringgit loan. All of them were arrested around the Kuala Lumpur area yesterday afternoon and were given a 3-day remand order. According to a source, all were suspected to have received around 8 million ringgit as commissions for approving the aforesaid loan for a project that was said to be fictional. The former president was said to have given the privilege of approving the loan without following the procedures and did not perform due diligence as a result of kickbacks paid. MACC Chief Commissioner Datuk Sri Azam Baki confirmed their detention and said they are being investigated under Section 16 of the MACC Act 2009. The Securities Commission is investigating a syndicate suspected of running 5 unlicensed investment schemes that have duped hundreds of investors of over 7 million ringgit. In a statement, the SC said that it recently raided several locations in Kuala Lumpur and seized records and devices used by the syndicate. The regulator says it also brought down the syndicate's servers following complaints and tip-offs from the public. The SC says initial investigations show that the syndicate had been operating at least 5 unlicensed investment schemes since 2016. They are Amal Trust, Asia Equity Ventures, Equity Global Business, Lindell Ventures and Wahid Ventures aka Wahid Trading. The regulator says the 5 schemes have been added to its investor alert list and that it had also requested the MCMC to block the relevant websites. The SC also reminds investors to exercise caution when evaluating investment opportunities, especially those promising high returns with very little risk.